Jim, given that tenor of reopening and as Jamie Dimon put it, euphoria coming out of the pandemic, why is it that equity volumes are falling so dramatically? And is that a warning sign as we're at these new highs?
Well, I think that candidly, I think that the new kind of buyer that we were talking about, the Robinhood strong buyer, the Merriman, I think they kind of got blown out. A lot of them got blown out because they concentrated on a couple of stocks. They concentrated on, when you look at Wall Street Bets, it really just decided that they were going to focus on AMC, at GameStop, and somewhat Palantir. Kathy Wood, the red-hot mutual fund, ETF manager, not that great performance. And then a lot of them get caught up in what I say is the high flyers. And we use Snowflake as an example. They just kind of got into these stocks and didn't know what they really own. Now, all of what I just said is going to cause tremendous opprobrium against me. But I think we have to talk about it, Carl, because what happened is that the younger investor, once again, kind of didn't go in the right place. Now, there is a lot of margin money that's involved. That's, again, not going to be good given the fact that those stocks went down. We had a two-tone market here. I know we call it value and growth. I think that is absolutely wrong. What we had is secular growth, and that's been hurt, and cyclical growth, and that's soaring. Witness the Honeywell comments from Steven Tusa last week. David, I have rarely heard an analyst praise a stock, praise a company so much. Ultimate cyclical going to secular gain from the industrials. And a lot of the younger people, David, got caught up in the secular gainers that, frankly, are, they got expensive. How about that? They like price to sales.
Yeah, they were more. They were certainly more speculative. Not that some didn't make money.
Yes.
I mean, by the way, anybody early in GameStop is still up enormously. The stock is still up 4,000% over the last 12 months. But some of the other names that we've talked about, and you just mentioned, certainly also CCIV, which we talked about so often, has come down sharply from its highs. And then we get to Viacom and Discovery and Archegos again and what happened there. Unclear how many of that cohort, Jim, were really involved in some of those names. But, I guess the question becomes, are they, and it's difficult to know, are they stung for a period of time to be back soon? Or is it, more along the lines, and it doesn't feel like it, but more along the lines of what we saw after the dot-com boom became a bust?
Well, I don't think they're that blown out. I think that they're going to Square to buy pieces of Bitcoin. I think they find that Ethereum and Bitcoin are a lot more exciting. They're drawn to excitement, David. And they also are drawn to what I regard as the kinds of stocks that came public in the last, let's say, 6 months that, frankly, had Airbnb, which is a great company. But people got too excited about it. People got too excited. I think about food delivery in general. They didn't get excited enough about the Ubers of the world. It's kind of interesting. They'll go for DoorDash, but they won't go for Uber. Carl, I think you've got to ask Kashwari. Daria knows he made an acquisition that was so brilliant, and people don't talk about it. You got to talk about it. The Drizzly acquisition in the alcohol and spirits business. I cannot tell you, this is the reigning king, Drizzly. It wasn't. He stole it. Now, I know one wants to hear that if they work at Drizzly, but they made a lot of money. But that was a vision. Dara was a visionary because that's what people want at home. It was just so brilliant. You got to ask him. It's so exciting.
Shepard Smith here. Thanks for watching CNBC on YouTube.